We're coming to the end of the daily doldrums. We're looking at what opportunities we have going into the afternoon and then into the end of the week. What you're looking at here is the intraday timeframes on the ES. And we had a grind higher here as we were going into our morning. We filled our gap, and then our leading indicators were supporting the continuation of this grind back up into our previous highs. Meanwhile, there's two unfilled gaps that are below us. One is at the 7,150 cents, and the other is at the 7,076.50s. So as we're moving forward here, as we're coming out of the daily doldrums, news is breaking. And of course, as we're coming out of the daily doldrums, we have now confirmed inside of the leading indicators a trend back down into the bottom of this range to potentially fill all these unfilled gaps and run back into our lows of the week. What we're watching for are next measured moves inside of the dollar, bank, and the indices. And now that we've made another new high here, this reactivates a extension long level. What we're watching for here are our morning lows to highs, and that does reactivate an extension long level. That little pullback and the continuation of a dollar rally would continue to drag the indices down. Bank continues to fall back down into its larger support levels. We're going to be watching for that traditional short and the high ticks at plus 400s to lead us into the continuation of our targets. And then the VIX is in the middle of the range, unfortunately. But as we move forward into the morning, we have a trading hours long from lows of the afternoon to our highs of the afternoon that we'll see if it takes us through that larger resistance level. Zoom out a little bit, and you can see here that the VIX has been defending its old contract lows to highs. And if the VIX is able to defend a pullback and lead through that resistance, that's what breaks this VIX out of its resistance levels. And then, it's important that at that moment, we are defending pullbacks, because if we run to the top of this range here again and a long breaks, what happens? We're just right back in a situation where we just continue to go straight sideways inside of this much longer term time frame. You can zoom out here a little bit to the hourly chart. And this is where you can see here we've had the tops and bottoms of ranges. This is where that saying comes from. You can trade the top of the range, you can trade the bottom of the range. Be very, very cautious about the middle. And with two unfilled gaps below us, that's why we're watching the 50%. Now, again, if we traded back into the bottom of this range, we wouldn't trust a short from highs, right? That would be dangerous. And you can see here that market participants are starting to price in higher oil prices, higher US dollars, higher VIX, and lower indices as we're moving forward here into the end of the daily doldrums. Let's go to our tick chart here. In the tick, we're in a minus 1151 low tick. So we are watching for those next pullbacks on the VIX and squeezes up into high ticks on the indices and see if they're defending before we lead right back down into the bottom of that range. The rest of the indices, you can see here NQ. This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.